On the EA exam, EITC questions are usually screening questions. Start with the gatekeepers. You need a valid SSN for work, US citizen or resident all year, and you can't be someone else's dependent. Then confirm there's earned income. Finally, watch for investment income limits and filing status traps. If you screen in the wrong order, you'll miss the disqualifier they hid in the fact pattern. For EITC, earned income is the star of the show. Think wages, tips, and net self-employment. Some special items can count, like certain disability retirement benefits before minimum retirement age, and taxpayers can elect to include non-taxable combat pay. But most benefit income is not earned income. Social Security, unemployment, pensions, and investment income don't help you qualify. If there's a qualifying child, run the child test like a checklist. Relationship and age are the big ones, but residency is where people get burned. The child must live with the taxpayer in the US more than half the year, with temporary absence exceptions. Also, remember the joint return test. The child can't file a joint return unless it's only to claim a refund. No qualifying child? Then, childless EITC has extra constraints. The taxpayer generally must be aged 25 to 65, not be another person's dependent, and live in the US more than half the year. On a joint return, only one spouse needs to meet the age requirement. EA exam tip. They love giving you a taxpayer who qualifies on income, but fails one of these non-income tests. Now, energy credits. The timing rule is simple but heavily tested. You claim the credit in the year the property is installed and placed in service, not when you paid the deposit. Residential energy credits live on Form 5695. The Residential Clean Energy Credit is generally 30% for qualifying items like solar and battery storage, and unused amounts can carry forward because it's non-refundable. The Energy Efficient Home Improvement Credit is also on Form 5695, but it works differently. It's still generally 30%, but subject to annual limits by item, and there's no carry forward. Also, newly constructed homes don't qualify for this one. Exam trap. Students mix these two credits and assume both carry forward. Only the Residential Clean Energy Credit has the carry forward feature. Clean vehicle credits are Form 8936 territory. For new vehicles, the credit can be $3,750 or $7,500 depending on battery and minerals rules. Plus, there are MSRP and income limits. Starting in 2024, the taxpayer can transfer the credit to the dealer at purchase for an immediate price reduction. But if the taxpayer later turns out ineligible, like income too high, recapture can apply on the return. 2 more credits to screen fast. Savers credit is Form 8880. It's 10% to 50% of eligible retirement contributions, with a max credit of $1,000 or $2,000 MFJ based on AGI. The taxpayer must be at least 18, not a full-time student and not a dependent. And excess Social Security or RRTA withholding, if someone had 2 employers, the over-withholding becomes a credit on the 1040. If it's one employer who messed up and won't fix it, that's when Form 843 comes in. Which type of income is considered earned income for earned income tax credit purposes? The choices include supplemental security income, military disability pension income, disability retirement benefits received before minimum retirement age, and Social Security disability income. Think about what the IRS treats like wages, at least temporarily. Think about it. The correct answer is disability retirement benefits received before minimum retirement age. For EITC, those payments are treated as earned income until the taxpayer reaches minimum retirement age. A tempting wrong answer is Social Security disability, because it sounds like disability pay, but Social Security benefits are not earned income for EITC. To qualify for the Earned Income Tax Credit, which requirement must be met? The options include having wage income, not being a full-time student, having a dependent child, or being a U.S. citizen or legal U.S. resident all year. One of these is a core eligibility gatekeeper. Think about it. The correct answer is that the taxpayer must be a U.S. citizen or legal U.S. resident all year. EITC has several tests, but this one is a basic eligibility requirement. A tempting wrong answer is must have wage income. Earned income is required, but it can be self-employment too, not just wages.